Hello, this is Gary Schnitkey, and this is a 5-minute Farm Doc Daily dealing with 2023 and 2024 effective reference prices and the next Farm Bill. The 2018 Farm Bill introduced the effective reference price, and the effective reference price can be above the statutory reference price, which was used previous to the 2018 Farm Bill, if 85% of the Olympic average is higher than the statutory reference price. For soybeans, the statutory reference price is $8.40. If we're looking at the 2023 effective reference price, the years from 2017 to 2021 are used in the calculation of the Olympic average. Those market year average prices for those 5 years, first, the high and the low are not used. That would be $13.30 for 2021, that's the high. The low is $8.48 in 2018. The remaining 3 prices are averaged and multiplied by 0.85, giving us $8.13. $8.13 per bushel is below the $8.40 statutory reference price, so the 2023 effective reference price equals the statutory reference price, or $8.40. In 2023, for corn, soybeans, wheat, seed cotton, and peanuts, these effective reference prices equal the statutory reference prices. In 2024, however, it's highly likely that the corn and soybean effective reference prices will be above the statutory reference price for corn and soybeans. We are using projected market year average prices for 2022, as that year isn't done, of $6.70 for corn and $14.20 for soybeans. Those come from the January WASDE report. Using those prices, we get an 85% average of $4.01 for corn and $9.26 for soybeans, both of which are above the statutory reference price. Next year, or in 2024, the effective reference prices for corn and soybeans are likely to be $4.01 for corn and $9.26 for soybeans. Effective reference prices likely will be above the statutory reference price for corn for the next several years. If we look at projections made by USDA, the effective reference price will be above the statutory reference price from 2024 up till 2028. Those, again, have the possibility of increasing PLC payments and ARC County payments in coming years. As we're looking at the next Farm Bill, there are interest in changing certain parameters of that, and one of those is increasing the statutory reference price. Rather than do that, we suggest making changes to the mechanism used to calculate the effective reference price. 85% of the Olympic average could be replaced with something higher, say 90 or 95%. The effective reference price is also capped at 115% of the statutory reference price. That cap could be increased to 20% or 25%. Changing the effective reference price has several advantages over changing the statutory reference price. First, the effective reference price will adjust to market conditions, and it's very difficult to set statutory reference prices, particularly in a time like this when structural change may have occurred in prices. Economic theory tells us that over time, the long-run actual price will equal cost, and therefore using market-oriented criteria such as this will cause the effective reference price to come into line with cost. You can read more about this issue in the Farm Doc Daily, linked to in the video description.